I'm Alan Kenny, Editorial Director with REIT.com, and we're at the Waldorf Astoria Hotel in New York for REITWeek 2016, NAREIT's Investor Forum. I'm joined by Joi Mar, Real Estate Analytics Analyst with Green Street Advisors. Joi, Green Street's been doing quite a bit of work lately with real estate disruptors. What are they, and why do you think that the risks that they're posing aren't really reflected in the current asset prices?
So what we have found in our analysis is that a lot of investors actually underwrite a finite hold period. So if something doesn't show up in a 7-year IRR model, it actually doesn't show up in values. And a lot of the real estate disruptors that we've been studying are long-term in nature. So when you think about something like e-commerce or Airbnb, that's already beginning to impact operating fundamentals. However, something more long-term, such as driverless cars, changes to the minimum wage, or online education, has yet to really show up in operating fundamentals or values, and we do think it will show up in the future. It's impossible to know exactly how these real estate disruptors will impact long-term growth rates across different property sectors, but what we're trying to do is take a thoughtful approach to relative risks. What we do know is that real estate disruptors will create winners and losers, and that creates investment opportunities.
And clearly e-commerce is having such a big effect on just about every aspect of the economy now. How do you see that playing out with retail and industrial REITs?
So e-commerce has already begun to impact a lot of different property sectors like you mentioned, and we think it has the ability to continue to wreak further havoc on low to mid quality malls, but at the same time it can create opportunities in other property sectors such as high barrier industrial. The jury is still out on what's going to happen to high quality malls and strips, but we do think that high quality real estate has a much better ability to adapt. For industrial, what we have actually found is that the traditional drivers of industrial demand have been subdued in recent years. However, industrial demand has actually been robust, and the disconnect is really due to e-commerce. E-commerce actually requires a lot more warehouse space than traditional brick and mortar sales, and by Green Street's estimates, we think that e-commerce will provide an annual boost to industrial demand of around 20%.
All right, driverless cars. Now that's one thing I'm definitely excited for. That, ride-sharing platforms like Uber, a lot of attention lately. What's that doing with real estate?
So self-driving cars has not yet begun to show up in a 7-year IRR model, but we do think it has the potential to cause serious disruption down the road. Uber and Lyft and other ride-sharing programs have already started to impact behavior, and self-driving cars could actually change the amount of cars that individuals own, which could create incremental storage space in garages, and there could be a conversion of parking lots or structures in high-value, high-density areas, think A+ malls, that could be converted into higher and better uses. Autonomous vehicles and ride-sharing really has the ability to shred the urban planning playbook and change the way real estate should be evaluated. When you look at how the automobile has changed transportation over the past 100 years, or how an interstate highway system has transformed large swaths of once vacant land into valuable real estate, ride-sharing has the ability to change real estate in a similar way. Suburban living may become much more attractive because commuters can be more efficient during their commute, and that could lead to households moving further away from the urban core.
Now, earlier we talked about the impact of disruptors on asset prices. Do you think that the impact of disruptors is being seen in REIT share prices?
You know, that's a great question. The answer is probably yes and no. E-commerce is already starting to show up in share prices. So when you look at mall REITs, they're actually trading at a massive discount to their asset value today. And some of that discount is likely attributable to e-commerce. On the other hand, we talked about driverless cars. The sector most at risk for driverless cars is actually self-storage. Yet today, self-storage trades at massive premiums to their asset value. So that tells us that either investors are not concerned about driverless cars, or the likelihood of adoption is so far in the future that it's not really reflected in today's values. Only time will tell if they're correct.
Well, Joi, thank you so much for your time.
Thanks for having me.
For more from REITweek 2016 and other REIT news and analysis, be sure to visit REIT.com.